Good afternoon, everyone. My name is Matthew Frailey. I'm the founder of BreakpointTrades.com. As this says, we are master market technicians. I founded Breakpoint Trades way back in 2003. We've been bringing you advanced technical analysis on the general markets, commodities, precious metals, even mechanical systems, trade ideas. Okay. This will be a deep dive market newsletter for Sunday, September 12th, 2021. This is not going to be a short 5-minute, 10-minute YouTube video. My guess would be possibly 50 minutes or so. I don't have it scripted, so we'll see how long this takes. So anyway, the vast majority of you are used to seeing my newsletters, my standard newsletters, which are simply, an audio-based newsletter with static images. So what I've started doing here to develop more of a YouTube presence is record my static newsletters as they're recording them. Okay. This may not be the best format overall for a video, but I think it works, and I will be, adapting this over time. So this is actually what our back end looks like. We have all our charts here on the left-hand side. You can see the red icon. That means audio has not been recorded. These are the individual audio cells. As I record, these cells fill up with an MP3. And so that's whenever you get the newsletter, how you can play the individual audio tracks. Here's my recorder. I can pause, I can stop, etc. Okay. So again, this would be the newsletter for Sunday, September 12th, 2021. And let's go ahead and get started here. So the weekend newsletter here, you can see, is divided into 8 major sections. Again, on the weekend, we do a deep dive. We discuss a lot of different things here. So that's the time to do it. And let me go ahead and move this up a little bit. There we go. So you can see the format the newsletter's divided into. We can look at the general market, major indexes, the upcoming economic tables. We'll look at major indicators, bonds. We'll examine all the sector charts. We look at 21 different market sectors. We'll look at a bunch of commodities. We'll look at US dollar, cryptocurrencies, precious metals, GDX. We'll also look at trade setups. Okay, this weekend I looked over 1,000 individual stocks, and by the vast majority of trade ideas I saw were shorts. Okay, as far as trade ideas, charts 97 to 110 are going to go over previously triggered setups. Charts 111 to 129 are new setups. So yes, quite a few charts here, guys. Again, you can see I got the link to this audio, or to this video that I'm recording now. Here I have my quick comments. I generally suggest that you pause the audio or the video and read over that. But, basically, as this says here, market finally had a nice pullback last week. For the week, the Dow lost 2.2%. The S&P gave back 1.7%. NASDAQ lost 1.4%. The Russell small caps gave up the most. They lost 2.8%. As I state here, let's face it, we've all been waiting for some sort of market correction pullback. We all know it was overdue. The market was up, say, 7 months in a row, without a major pullback of, say, 5% since October of last year. That's quite a long time. We've had negative breath building in the market. Plus, this is the typical weak seasonality time of year, September to October, and usually it begins around the mid-September time frame, which is around where we are. All right, so finally a pullback. I think we're due for more of a correction here, which I'll show you in the charts below. Okay. One of the statements, sell Rosh Hashanah, buy Yom Kippur. So that could be in play too. By the way, Yom Kippur is Wednesday, Thursday. This is also going to be options expiration week. And over the last 4 months, the market has sold off into options expiration. So far, it's doing that. And it's typically rallied after options expiration. Now, the past 4 times, it's rallied to new all-time highs. I kind of don't think that's going to be the case this time. I think this could be a larger correction. We'll see. One thing the market's going to be looking at this week is the PPI, or the CPI. The CPI is released on Tuesday. The PPI came in last week hotter than expected. As we know, Again, all you got to do is go to the grocery store, go to Lowe's, Home Depot, you name it. All goods are up. Inflation is hotter than expected. It's higher than what the Fed says. They got to make up the numbers to make it, look lower than it is. But in reality, it's much higher than they state. But even their made up numbers, we're still seeing that inflation is hotter than expected. So if the CPI data on Tuesday comes out high, that could be spook the markets perhaps. So let's keep an eye on that. As I stated, it's options expiration week. Market over the last 4 months has typically sold off into that, then rallied afterwards. Okay. Short term, market is a little bit oversold here. A couple of the McClellan oscillator systems closed below the lower Bollinger Bands. But that doesn't mean you can't have 2 or 3 day closes below those. All right. So we are a little oversold short term, but again, we could just go lower here in the short term. The S&P in particular, let's use that as a proxy. There is short term, there's an open gap at 44.45. I'll show that on the charts below. I think that's a magnet. And then below that, there's another support at 44.30. Then you have the 50-day moving averages. Okay. Bonds, they remain in a large, TLT 20-year bonds remains in a large coil pattern. High yield corporate still holding up fairly well. Keep an eye on that. Commodities. Last week we saw the strength primarily in crude oil, natural gas, and copper, but weakness in precious metals and the agriculture sector. Crypto, of course, got hammered last week. Bitcoin, the key support to watch is the 50-day moving average. All right. Let's go ahead and move on with the charts for the newsletter. So the first chart here, this image shows you the SPY reversion to mean systems. So as most of you know, I sent out an email on this on Friday. One of the SPY reversion to mean systems took a first entry trade on Friday. Now, I sent out this basically right at the close on Friday. My back end trade station had some issues. So some of you may or may not have seen this trade in time to take it. I don't think that's necessarily a bad thing. I wouldn't be surprised if we see a little more weakness this week, so you may be to get a better price than this system. Remember, guys, these systems aren't perfect. They're reversion to mean. This trend pullback system, it can take up to 3 entries. So if we get another couple good days sell off, it'll just simply take maybe a second or a third entry. All right, that's how those systems work. They don't try to be perfect. They scale in to an oversold condition, then they get out on a bounce. Okay. Next, let's go and move on to the back to the general market analysis. So here's the major indexes. You can see last week, again, nice down week for the major indexes with the Russell clearly leading to the downside. You can see big sell-off on Friday, as we know, which accelerated in the afternoon. As far as the major market sectors, we follow 21 of them here. You can see from transports all the way to utilities. And every single sector for the week was down. So pretty broad-based sell-off here. Okay. And some pretty good numbers here. I see a lot of 3 and 4% moves down for some of these index sectors. Currencies, US dollar, which what we mainly follow, up about 0.6% for the week. Cryptocurrencies, you can see, had a pretty nice correction last week. Again, just looking at Bitcoin as one of the proxies, the main support is the 50-day moving average, and I'll show you that when we get to the charts below. Commodities, you can see here, green and red. Again, the strength was crude oil, up 0.6%. Natural gas, which has been on fire, up 4.8%. And it was down 1.85% on Friday, so it was up more, but still a strong week. Copper up 2.7%. Otherwise, weakness in the other commodities here, and especially precious metals. Now, what I don't have on here is some of the more oddball commodities like uranium, which has been on fire. I'll show that below. I've been super bullish on that. And here's bonds below. TLT up slightly for the week. It's still in that big coil, and high yield corporate down slightly. Next. Item number 4 shows the economic news calendar. And again, this week, early on Tuesday, the market's going to be focused on the CPI numbers because the PPI numbers came in hot last week. And if this comes in hot, that could further spook the market. Again, that would signal, higher inflation than normal. It could eventually force the Fed's hand to cut back on some of that QE, which, again, as we know, the market is all about that. That's what's been supporting these artificial markets for years, all that liquidity. Next. So image number 5 below here. Here's some seasonality charts, and these are from a variety of sources. They all basically say the same thing. This one's goes back to 1928. This one goes 20 years. This is 59 years. And this one here is back to 1985 to 2019. And so you can see seasonality typically right around the mid-September timeframe. Markets historically have been weak. So you can see this on pretty much all the charts. So again, everyone knows this. This is common knowledge. And we're right in this typical weak seasonality time of the year. Next. Let's go and jump to the index charts, guys. So this first chart here, item number 6, shows you a monthly view of the S&P 500. And, again, so far, it's only the 12th day of September. But longer term, this is probably the charts that cause Steve and I the most concern. Okay, it's a very simple chart, which you have here. This is the monthly view. This here is a moving average ribbon. You know what those are. This has the 9, 20, 34, and 50 EMAs. And this here is one of our more exotic moving averages. It changes color by slope. That's our BBTMA Deluxe. And it's always a good guide to put that over the moving average ribbon. Again, so just quite simply, moving average ribbons with this, they ebb and flow. They go through periods of contraction, like you see here, whenever the BPTMA is red. And when the ribbon is bullishly stacked, those end up being buying opportunities or consolidation periods, right? It's like even back here in February 2020, you could see the ribbon was quite wide. It pinched. It was a buying opportunity. It was a pretty damn good correction here. Got a 35% correction. But look what you got now. You got this period of expansion, and it is super wide. When you look at the past, you almost never see the moving averages as this expanded out. Okay, so this is very wide. This will eventually be due now for a period of contraction. Okay. By the way, this indicator down here, this is the derivative of the moving averages here, the distance between them. And you can see it went negative here. That means the slope the slope increase is declining. Okay. But the scary thing is that this is a monthly chart. So each candle is 1 month, guys. And whenever this starts to go through a period of contraction, it may take quite a long time to do so. Like back here, this was nearly a year long. I mean, all these were quite long. Or you could have a faster correction, but a deeper correction in price. So you either get a correction in time or in price or both. But either way, when this starts, this could take quite a long time to work off. Again, this is something that you don't trigger from. You don't get your triggers from this monthly chart, but it is something to keep an eye on the bigger picture. Next. Chart number 7, here's a weekly view of the indexes. Again, we've been just melting up since the March 2020 timeframe. Nice pullback finally last week. We were all looking for it. We're in that seasonality time of year. Now we'll see if it builds on this. The Russell here at the bottom, that's been in a sideways consolidation correction for the last 6 months since March. But so far, one week pullback on the indexes. Now we'll see if this builds. Next. Chart number 8, here's a monthly view of the indexes. Again, you can see on the S&P here, straight up here. We were up 7 months in a row. Finally a pullback here, mid-month. Next. Chart number 9, here's a daily view of the major indexes. So you can see here the Dow at the top. We broke this uptrend line last week. The S&P got a long uptrend line going all the way back to late October of last year. We're still holding that. There's also a 50-day moving average right below here. So that's your first support. Here's the NASDAQ, still a ways from its uptrend. Here's the small cap IWM. We've been in this sideways range channel for 6 months. Next. Chart number 10. Here's a weekly view of the KISS systems. So again, think about these as some sort of dynamic trailing stop idea. So these are the weekly views. So the S&Ps had this 13 to mark. So the DVT price, we didn't get any new DVTs last week. You can see 42.37 on the S&P, 32, let's say 353 on the triple Qs. Here's the Dow, and here's the IWM. Okay, we've had these DVTs since, say, April, May of last year on these weeklies. They've been pretty good longer term guides. We're still quite a ways away from those weekly DVTs, as you can imagine. Next, let's go ahead and move on and look at the indexes themselves specifically. So here's a weekly view of the Dow. We've been showing this rising wedge on the weekly chart. It's been developing here for the last few months. Finally, a nice pullback here. A little break of this trend line. I wouldn't say it's a confident break yet of that wedge, but the wedge is definitely pretty nicely formed here. You also have the MACD divergence, which is what you always see on a wedge, and some RSI divergence. Now, these numbers here I added are symmetry. Okay, so these are the pullbacks numbers that we've had in this uptrend from the March 2020 lows. So this is about 2,740 points, 3,055 points. This is 1,800 points. So a general target on a pullback on a wedge is symmetry. So you measure the back of the wedge. That's about 1,800 points. If you subtract that from here, that would give a target roughly of, 33,800. Oh, we'll see if that plays out. Now, on a longer term basis, if you eventually break symmetry, it would require a pullback larger than this. That would set up for potentially a much larger correction if on a symmetry break. But clearly, we're nowhere close to that. We're just started pulling back here. So this would be your potential target of the wedge. Okay. Next. Chart number 12, here's the daily view of the Dow. You can see it had this coil-like pattern and this uptrend, which we clearly broke last week. Now you got kind of an air pocket here, right? Your next major support zone is all the way down here around the 33,500 to 33,400. And of course, the 200-day moving average here in green. If price wants to go down to here over time, remember the 200-day moving average is going to be moving up, so likely it would catch up to this area. So this is a big support area. This broken trend line and 50-day moving average is now resistance. So if we get a bounce, watch this area to act as resistance. Okay. Next. Moving back to the S&P 500 chart. So here's a monthly view of the S&P. Again, up 7 months in a row there. I mean, look at this slope we've had since that March 2020 bottom. So little pullback here. Again, it's still early in the month. Still no changes in the longer term trend. I already showed you the other monthly chart of the S&P above. I should have moved that down to here, but let's go ahead and move on to the weekly. So chart number 14, here's the weekly view of the S&P. Just a nice simple guide. You got a trend line here on the RSI to monitor. You have your moving average ribbon. And here, again, you can see the steep uptrend. A simple guide also for, say, swing stop for a 401k type plan would be at the higher lows. So you can see all your higher lows you've had in this uptrend. So here's your, say, latest higher low. I'd say this is a rough guide similar to the way the weekly DVTs work. Okay. Again, we've been building RSI divergence or MACD divergence here. Now we'll see if this breaks further. We haven't lost the 9-week EMA here yet. Next. Let's move to the daily chart. So here's the daily view of the S&P, okay? Just a very simple chart here. You have some major moving averages. The two moving averages in red are the 50-day simple moving average and 50-day exponential moving average, okay? So all year long, we've had fairly shallow pullbacks, 2.5%, 3% max. And those pullbacks have tended to, test the 50-day moving average, is maybe undercut them for a day or so and then recover. So pull back, recover, pull back, recover, pull back, recover. So all these have recovered. That's the last 6 times. And the last 4 times here from May, June, July, and August, these have all corresponded with options expiration. Okay, so the market's typically sold off into options expiration and then rallied and strengthened and rallied to new highs after options expiration. So interestingly, this week we have options expiration as well. So we're going to sell off down to the 50-day moving average again here and then recover to a new high. That's possible. I tend to think that we're not going to see lucky number 7, though. This has occurred 6 times in a row now. Is it going to occur a 7th? It definitely could. But something tells me that it may be different this time. What I think we could see here is a further weakness, test the 50-day moving average, then rally. People think we're going to go to new high, but then form a lower high to fake everyone out. That'll probably be a shorting opportunity and we sell off again. That's my guess. Again, we'll react to what occurs. That's just what I'm guessing. Next. Chart number 16 is another daily view. So simple chart. You can see the uptrend line here. The prices here represent the point pullbacks from the highs, so kind of like a symmetry. So far, 88 point pullback from the highs. Previous pullback was 113 points. Previous one from that was 161. Again, clearly, this is probably at least a target area to short term down here. Next. Chart number 17. Here's another daily chart of the S&P zoomed out. Okay, we got a couple moving average ribbons up here, which, they haven't changed. What I want to focus on here is this long wedge pattern. Okay, this wedge goes all the way back to September 2020. So it's quite a long wedge. We've been just drifting higher in this wedge all year long. We found resistance once again at the top of the wedge here. We've pulled back to near this uptrend line of the wedge. Can we bounce off and rally again in the wedge? We could, right? Or if we do break it confidently, this is a scenario that could play out. So remember, wedges, one of the targets are a symmetry. Take the back of the wedge, which is about 380 points, subtract it from the high. That would give you a target of around 4167 down in here. You can see, again, this would be a big, big support area down in here. Again, I wouldn't expect a straight move down here, guys, if this were to occur. What I think would happen is we get a move down, break the wedge, rally up, maybe back test the underline, broken uptrend line of the wedge, find resistance there. So you'd have a wave A down, wave B up, lower high, which would be your shorting opportunity. Then you get your C move down. Okay. So that's a scenario to monitor should this correction be deeper, okay, than the last, shallow correction we've had all this year. Next. Chart number 18, here's the 60-minute view of the S&P. These horizontal lines, they're very good support resistance guides. They're where the NYSE tick indicator spikes over 1,000, and then the 1,500 areas, the thicker lines. So on Friday, we had a tick pivot show up at 45.19 as the tick spiked above 1,000 in the morning. Ended up finding resistance there. We sold off quickly. We lost this pivot, and we closed right around this 44.60 pivot. Okay. Next ones below, these are all potential supports now. 44.48. Also notice there's an open gap here. To me, that's a target, right? And then there's a big kind of air pocket from 44.48 to 44.15, which, if we get down and fill this gap, this could be a target over time. Okay, since there's not a lot of support between here. Again, think of it like an air pocket. Next, chart number 19. Here's a traditional 60-minute chart. So again, we've been kind of monitoring this potential 5-wave pattern. Steve and I were talking about that. over the last week or two. You can see we had the divergence show up on the MACD, sold off. Again, these horizontal lines here are great support resistance guides. You know, this was the support. We bounced off. We lost it on Friday. And we basically lost this one on Friday as well, 44.70. This shaded area that shows that open gap, that's often a target for the S&P. These gaps are filled magnets, so I think that'll be filled probably early this week. Then your next one is 44.30. Below that, then again, you don't really have one till 43.70. You can see that's matching these previous support lows. So that's your support areas, guys. I think we fill this gap early this week, and then maybe go down to here. And if we lose that, that would be your next target, 43.70. All these are support areas to monitor below. Next, chart 20. Here's a 15-minute view. Again, you can see the stair-step action we had down last week. Big sell-off on Friday. You can see this open gap from August 23rd is likely a target in the short term. Next, let's move to the KISS charts. Here's the daily KISS. No new DVTs here, 43.68, still pretty wide on the daily. Right now, if you look at the two ribbons here, we've been talking about this. BPTMA Deluxe has been red for 4 bars. You can see the last 4 times it was red 4 bars before turning positive. Now, because of the strong slope here, it's not going to turn green easily, even if, say, Monday was an up day. So this is definitely going to break this trend right away this week. All right. We'll see. Moving average ribbons pinching here, the BPTMA into it. We'll see if it can curl up or not. The 60 stochastic is still over 80%. So that's, if you want one positive for the market, that would be a positive. The fact that it's still way up there in momentum condition. Next, chart 22. Here's the 2-day KISS chart. So no new changes here. DVT still 43.48. It's been there for a while now. Next, chart 23. Here's the cycles. So I talked about this early last week. Here's the daily chart up here. I talked about the A's. So the A's are amateur buying, and you can see they tend to occur near tops or bottoms. So you had it here, and then you pull back. You had it back here, mid-August, you pull back. You had it here. Again, they tend to be early. Usually they're early by a few days. Like here, you had it, and you went up a little bit higher, and then we had it to Mark 9, and boom, sold off. Short-term, ATR is your support. You can see you had your amateur buying on the 195-minute. That's the half-day chart. We lost the ATR there. One thing I'll be monitoring is the 60 stochastic. It's nearing the 50% down here. The 120-minute down here, it's right at it, okay? So that's a potential support, guys. So if you're new here to Breakpoint Trades, the 60 stochastic, it's something we talk about a lot. When you're uptrending, the 50% area tends to be an important support area. So it's either going to rebound off there or it's going to slice through it, okay? Next. Moving on to the triple Qs, chart 24, triple Qs weekly. Again, big cap tech, it's been holding up the best. It was only down 1.3% for the week. Hell of a move from the 2020 lows. Congrats if you bought that and held it. Just crazy move percentage-wise since that time. Next, chart 25, here's the daily. So we had this coil-like pattern setting up there in August. We busted out of there, rallied up to this resistance, pulling back. Short-term support is this 20 moving average, and then this 370 area. You can see that was previous resistance. That's support. Now, then you have the 50-day. Below that, then, you know, that would open up the door for a move down to this zone. Okay, but for now, that's your support, and this 370 especially. Next. Chart 26, here's the 2-day KISS. Moving to the KISS charts. 366 is your DVT there. No new changes there. It's been in place for a couple weeks now. It's been a pretty good guide here about ignoring a lot of the noise, at least since the April, May time frame of this year. Next. Chapter 27, here's the daily KISS. No new changes here. DVT 368, ATR right there. BPTMA pinching into the ribbons. Next. Chapter 28, here's the cycle time frames. Similar to the S&P. You know, we were quite overbought on the daily at a little DeMark 9, selling off. ATR is your current support. 120, the half day, we haven't lost the ATR yet. We're testing it. So let's move on. Chapter 29, here's the 60-minute view of the triple Qs. Now, this is something I posted on Friday that we had, and Thursday as well. We had this potential rounded top on the triple Qs. And you could see this started playing out on Friday. We lost this support. So it's an umbrella top, sort of like a complex head and shoulder type pattern. And just measuring this pattern, you could see this would measure lower. Okay, if you just take the height of this pattern, subtract it to here, which I didn't, but probably measure down into this range. But either way, your first support is right down here around this 375 area. And in longer term, this 370. So this is probably a target over time. This still looks quite bearish here, guys. Next. Chapter 30, here's the Russell 2000. Again, it's moving average ribbon. I commented way back in March how wide it was and it needed a consolidation. And boy, has it ever. Hasn't been so much in price, but it's been time consolidation. So it's still in this big range pattern. Next. Chapter 31, here's the daily chart. Again, shows you this range. Big sell-off on Friday. Finally, chapter 32, here's the 60-minute view. One thing to note, there's an open gap down here that could be a magnet should this sell-off continue. By the way, here, the dotted lines represent symmetry. We lost this uptrend symmetry back here. That opened up the door for more selling, which we got, you know, last week. So that does it for the major indexes, guys. Let's go ahead and move on and look at some indicators. Chapter 33, here's the VIX. So the VIX had a big up day on Friday, but is not above its upper Bollinger Bands. And the upper Bollinger Bands are now sloping up. So, you know, it's possible it's going to have, the VIX is going to have trouble closing above the upper Bollinger Bands right here unless we have a big sell-off, another big sell-off like Friday. So we'll see. Clearly the VIX, guys, you know, some of the best signals are when it closes above its upper Bollinger Bands and then back inside. That's these vertical lines. You can see how good these buy signals have been. We're obviously nowhere near that. And recently, this correlation indicator, the VIX, became uncorrelated to the S&P right in here. That was a warning sign from the market a week ago. And lo and behold, that gave you a great warning, didn't it? Okay, so that's also another great guide on the VIX. Next. Chapter 34, here's the VVIX. And this VOMA line, the 110 area, this spiked above 110 mid last week. On Tuesday last week, that gave you another great warning signal, early warning signal of the market about a pullback. And that played out very well as well. So another great guide. So one thing that separates Breakpoint trades from a lot of other sites, guys, is we give you the live chart URL to these. So you can actually take this chart of ours, save it on your end, and look at it, you know, a couple days later, a week later, a month later. We're not just giving you a static image. We actually give you our chart URLs. Okay? Let's move on. Chapter 35, here's, again, we've had a lot of things that were, you know, bearish things were showing up in the markets, such as this. This is the large cap advanced decline by the small cap advanced decline. You can see we were making lower highs in the small cap advanced decline, higher highs in the large cap advanced decline. That was a scenario that, you know, couldn't continue playing out. Finally, now we're leading to some market pullback. Next. Another interesting indicator that I've been pointing out for the last month is this NASI indicator, NASDAQ Summation Index. And this went negative way back in July while the NASDAQ itself kept going to new highs. Usually this doesn't go negative unless you've had a correction in the NASDAQ, okay? Like in here. So this was quite an anomaly, And finally, I think we're going to start seeing this play out a bit. Next. Short term, the markets are a bit oversold here. Here's the Dow McClellan oscillator with Bollinger Bands. And you can see we closed below the lower Bollinger Bands on Friday. Again, you know, on strong market sell-off, sometimes you need 2 or 3 days below the lower Bollinger Bands like you did back here before you finally got a bounce. Sometimes you only need 1. But it is a short-term guide that we are a little overstretched in the short term. So just be aware of that. You can see the past times when it went below the lower Bollinger Bands gave you trade opportunities. Next. So this chart number 38, this is our McClellan oscillator systems for the S&P, or for the major indexes. Here's the S&P, here's the triple Qs, here's the Dow, and here's the IWM. So you can see this one, the Dow went long on Friday. I posted that on the trading community blog. Again, the way these McClellan oscillator systems are, think of them as reversion and mean type. Sometimes you need 2 or 3 buy signals before you finally get a bounce. Like here, you needed a second buy signal before you got a bounce. Okay, so they're not perfect, guys. Sometimes they are. You get a one and done, but sometimes you need 2 or 3. But this did go long on Friday, matching that S&P chart I just showed you, or the Dow chart I just showed you. Next. Chart number 39, here's the statistics for that Dow McClellan oscillator system. Profit factor of 9, which is pretty good. That you get your profit factor, the gross profit divided by the gross loss. So essentially for every dollar it lost, it made $9. That's what that means. Here's your profit curve. Okay. 109 trades, 73.4% winning trades. Next. Chart number 40, here's the S&P McClellan oscillator. It did close just slightly below its lower Bollinger Bands on Friday, but just slightly. Okay. Again, you could always get one of these situations where you need 2 or 3 days below as well, okay, before you get your bounce. But again, just closing below the lower Bollinger Bands does have my attention short term. Next. Let's move to the bonds. Here's TLT 20-year bonds. It's been in this big coil pattern. So last Thursday, I thought it was going to break out of this coil. You could see the big update, but then it pulled back on Friday. So still coiling here. Again, the CPI data coming out on Tuesday is likely to be a catalyst for this to move one way or the other. Okay. Remember, this moves in opposite to interest rates. So if this were to break to the upside, long-term rates would go down. Okay. If this breaks down instead, long-term rates would go up. Next. Chart number 42, here's J&K high-yield corporate bonds. Where this goes, the market tends to go. Now, it was down on Friday along with the market, but it's still holding up very well here. Still above the 9 EMA. So if you want a positive for the market, that's a positive. Now, if it loses the 9 EMA here, that would be a negative, but clearly you got a lot of support below down here. So your next support would be essentially the 20-day and this trend line. Let's go and look at the market sectors. On the weekend, we like to look at nearly all the market sectors just because it's the weekend we have time. So here's the transports. They've been downtrending since May, as you know. You can see your moving average ribbon here flipped to a bearish configuration then. We were developing this coil, which we pointed out. We broke that coil last week, now testing the 200-day moving average. So this sector still remains very weak. Here's your next support areas below. Next. Chart number 44, here's financials. They had this little double top back here, pulling back. You got a support here. We'll see if that can hold or not. 50-day moving average there as well. Next. Chart number 45, here's the weekly view. So a couple weeks ago, I commented about, a new high could form a divergent high on the MACD, and so far that's a potential. These are your long-term supports, of course. Remember, this is a weekly chart. Next. Chart number 46, here's the banks. Like financials, they stalled at this resistance, testing their 50-day. Next. Chart number 47, XLK, technology. This is the big cap tech. It's been in this uptrend channel. We stalled at the uptrend channel parallel line. So this is your next support area. Remember, big cap tech is what's been holding the market up. Things like Apple, stuff like that. Keep an eye on this sector. Next. Chart 48, XLC, the communications sector. This contains a lot of those big stocks like Facebook, Google, Netflix. Again, a lot of the big cap tech. So it's had a nice pullback here, but still overall uptrending. Hasn't lost any major supports. Next. Chart 50, semiconductors. They stalled out here at some resistance last week. Next. Chart 50, biotech. Biotech had a nice rally off this double bottom support, but stalled out at the 200-day moving average here in this downtrend line. Now we'll see if this can form a higher low. Let's watch these moving averages here, the 20 and 50-day, see if they can act as support or not. Your moving average ribbon did flip to a positive configuration, so we'll see if it can stay that way on this pinch. Next. Chart 51, healthcare. Finally, pulling back nicely. Since we had a double top here. Healthcare has been on fire this year, but again, got extended finally, double top. 50-day moving average or next support. Below there, not a lot of support down in here. Next. Chart 52, industrials. More of a sideways move since May. Finally lost some support area. Not a lot of support in this range, honestly. Below here, really nothing until you get down to this area. Next. Chart 53, materials. So far holding up fairly well. You can see a lot of these sectors are at their 50-day moving averages, guys. Next. Chart 54, consumer staples. It's coiling at the moment. Coil forming. Next. Chart 55, utilities. So far pulled back from this resistance. This is your major support at the moment. 67.50. Next. Chart 56, consumer discretionary. Still very strong sector. Briefly made a new high here, pulling back just a little bit. Next. Chart 57, retail. It's been more of a sideways move all summer. Got a resistance or support right here. This has been a sideways move long enough that if this breaks down, it could have a pretty good move lower. At least down to its 200-day. Next. Chart 58, real estate. Made a new high there. I pointed this out. It had a nice move out of that coil, but if you didn't take profits, boom, it's giving it back. Nice pullback. Next. Chart 59, home builders. Next. Chart 60, energy. Again, it's had a nice correction this year from the June highs. It's been among the weaker sectors. Nice rally near the 200-day moving average here. Tested it again. Still needs work to do here, guys. It's got a resistance area in here. Next. Chart 61, oil services. It's been weaker than energy a little bit. Here I drew a trend line and monitor. If it could rally and take that out, that would be a positive. Sort of has a little inverse head and shoulder look to it here, but again, this could easily also just sell off again. You can see this is your support area. So that does it with those U.S. sectors, guys. Let's go ahead and move on. Chart 62, emerging markets. This is the weekly view. So this had a nice correction this year. Look at topped out in basically February. Bullish views, you have this big, large ABC correction. You can see this area that represents support going back to 2018. Little pullback last week, but overall still in the same pattern. Next. Image number 63. This should have been up with the SPY system. So as I stated, the SPY system did take a first entry on Friday. You can see it here on the table, the open trade. All right. Again, apologize, this got out of order. Next. Chart 64. Haven't looked at this in a while. Japan, Tokyo, Nikkei index. This, I wish I looked at this a couple weeks ago. It was in a beautiful tight coil. Look at that rally from that coil. Gonna monitor this going forward now. Next. Chart 65, here's the daily. It is quite extended though. Look at the daily here. So this is not something I'd be wanting to buy at this point, but maybe after a pullback. Look how wide the moving average ribbon is there. Remember, moving average ribbons get too wide, they need to contract. Next. Chart 66, here's the 60-minute view. You can see the MACD divergence. So that supports probably a pullback coming in that daily chart. Let's move to commodities. Chart 67, DBC, commodity ETF, weekly view. Again, it's in a long-term uptrend. I talked about commodities being in a bull market back in December of last year, and so far that's proved to be the case. The last pullback here found support. Maybe this is some sort of wave 4 pullback. So think about this. Could be a wave 1, 2, 3, 4. Maybe you get another move up in a wave 5. Next. Chart 68, here's the daily view. You can see how we bounced out that support in mid-August. Still unable to take out this recent highs, but looks bullish. Next. Chart 69, crude oil in this downtrend channel, parallel channel lines. This is your resistance. If we can bust through here, close over it, we clear the 50-day moving average as well, that would be bullish. Next. Chart 70, natural gas. This has been the star lately. Look at this move in natural gas. The other star is uranium, but otherwise, this one here is your star. Look at this move from July out of this coil. Testing the 2018 highs. Next. Chart 71, here's the daily view. Again, heck of a move out of this pattern. Little divergence here, but I looked at a 60-minute. It's still fairly strong, guys. So be careful trying to short this. It is super strong. Next. Chart 72, copper, weekly view, up 2.7%. I drew 2 parallel lines here in a monitor. That's your resistance. Again, long-term uptrend bull market. Next. Chart 73, there's the daily view of copper. The bullish view is you've had a large ABC correction here, and it's going to go to new all-time or new highs. Next. Chart 74, DBA, agriculture ETF. Again, the ags were weak last week. Okay, all the ags down 2.5%. Long-term, of course, it's in an uptrend. Next. Chart 75, here's your monthly view. Again, long-term, it's in a bull market. Okay, you can see broke out of this multi-year channel back late 2020, which I talked about. Your moving average ribbon flipped to a bullish configuration. It had been bearish, at least stacked since 2011. So this is clearly a bull market. Large pullbacks here are buying opportunities. Next. Chart 76, here's the daily view. A lot of chop here lately. Next. Chart 77, lumber. I pointed out this major low here, 5th wave divergent low. Not an easy way to play lumber futures, though. I looked into it. It's quite expensive. So, you know, this is more just an academic thing. It was just a textbook falling wedge here with divergence. Again, a pro tip, guys, falling wedge patterns always have MACD divergence. If you don't have MACD divergence, you're not at a 5th wave. Okay? You're more likely a 3rd wave. Next. Chart 78, uranium. Now, this has been the star, guys. So back uranium, I talked about the start of this bull market in late 2020. You can see here the weekly chart breaking this long trend line. That started the bull market. So all these pullbacks this year have been buying opportunities. You had your largest pullback in the bull market here lately, from the July highs to the August lows. That was a buying opportunity. I hope you took advantage of it. Look at these last 3 weekly candles. So up 10% last week. It was up, what, 15, 20% last week, up previous to that. So hell of a move in uranium. Again, it's a bull market, guys. Buy those pullbacks. Next. Chart 79, here's the monthly view. Again, this is textbook, guys. You had this monthly chart. Look at this. Sold off. It based for years here. You broke this trend line in December last year. That started your bull market. Your moving average ribbon flipped to a bullish configuration. You can see that large pullback we had in July and August. Look, if you looked at the monthly chart, it just looked like a pullback in the bull market, didn't it? That's why you got to look at multiple time frames. Any of you ever read Stan Weinstein's Secret to Bull and Bear Markets? And he talks about those long basing periods, stage 1 patterns. That is what this is. Okay. Finally, Chart 80, here's uranium on the daily. Again, here's the daily. You could have triggered long right here on this trend line break. Or you could have bought around this 200-day moving average, knowing that the pullback was a buy opportunity in the bull market. And look at this massive move here. Look at the volume. Now, short term, quite extended. You have some RSI divergence here now. Don't buy it here, okay? Buy another pullback like this. Next. Chart 81, one of the uranium stocks, CCJ, obviously moving in concert with uranium metal, as you'd expect. Next. Chart 82, Bitcoin. So Bitcoin's had a nice correction. You can see last week off this divergent high. You can see the divergence there in the MACD. Big sell-off, about 15% off those highs. So far, trying to hold the 50-day. We'll see if it can do so. What we may see here is a bounce lower high and then a sell-off to break that 50-day. That 50-day is big support, guys. Next. Chart 83, Ethereum. That's held up. This also had the big sell-off. Didn't quite test its 50-day. Bouncing off this support trend line, but to me, it looks like a weak bounce. I think it forms a lower high up here. I think it's a sell opportunity. Next. I'm not going to go through all the crypto stocks. Mara, Riot, those are some of the big ones. This one held up the best, HUT. So if the area does bottom, this is one I'll be monitoring. You can see volume patterns very bullish. Next. Let's move to the US dollar weekly view, up 0.6% essentially. We had this double bottom back here. Right now, kind of a lot of chop in here. Next. Chart 86, here's the daily view with some fibs. Next. Chart 87, here's another daily view. This is kind of what I'm monitoring. This is your big support right around here. And this is your big resistance. So we'll see what it can do here. Will it hold this support, or is it going to rally and break through here? We'll see. Moving average ribbon is bullish. She's stacked at the moment. Next. Chart 88. Oh, here's another chart of the dollar, a monthly view. Kind of shows your long-term support, your long-term resistance areas. Let's move to precious metals. So precious metals didn't have a good week. Gold down 2.3%. You can see overall this downtrend it's been in since August of last year. This is your major support. This is your major resistance. Quite honestly, this is really the only chart we need to look at gold. Moving average ribbon's kind of pinched here. Next. Chart 90, here's the daily chart. A little more choppy looking. Like I said, the weekly's cleaner. Got resistance right here, 1840. Got a potential support here. It's trying to hold. That's your major support. For the bulls, I want to see this area hold. I don't want to see it sell off. The negative here is the ratio. GDX-GLD ratio's breaking this trend line here. That's not good. Next. Chart 91, silver. I showed this a couple weeks ago. This big, it's been in this range from 22 to 30. This big coil, which it broke. I said this coil trend line would be resistance, and it was. Rallied up to there, stalled, selling off. Next. Chart 92, here's the daily view of silver, stalled right at that 50-day moving average. Next. Chart 93, GDX, gold stocks, got hammered, down 5.3%. Big support down here. Can it hold or not? Who knows? Honestly, guys, gold stocks are the toughest thing to trade there is. Okay, many of you would agree with me there. This was a good selling opportunity up here, the 61.8% fib retracement. Next. Chart 94, daily GDX. We had that double bottom support, but stalled right at the 50-day. Your bearish view is that we simply had an ABC bounce here. Next. Chart 95, daily view of GDXJ. Stalled on its 50-day. Much weaker than GDX. And finally, chart 96, GDX 60-minute chart. You can see this channel, which it broke last week, back tested the channel line as resistance. That was bearish or a shorting opportunity and sell off. All right, guys, the final part of the newsletter, we're moving on to trade ideas. So first off, we'll cover recently triggered ideas. So Apple's always one to watch. It's the biggest weighting in the market. Look at that sell-off on Friday. Of course, they had a negative judgment with that suit with Epic. That didn't help. 50-day moving average right here. Again, we showed Apple's along way back here in this coil and here. So to me, this is one I wouldn't have been long anymore anyway, or that tight stop. So, but this is more of a barometer for the market, in my opinion. Next, I'm going to go over some of these recently triggered setups. So EMR was a short idea from Steve last week. Rising wedge. Again, wedge patterns, guys, remember, MACD divergence. They always have divergence. So this played out nicely. Next, following up on some longs, Unity. This was a great trade at a nice base here. Back test of this. Here's a technical tip, guys. You break resistance. If you miss that break, you got a second buying opportunity on the if it back tests that trend line as support. So that was the area to buy it right here. So this was a target. It tagged this. There's another target if it can fill this gap. But it's been a good trade. Next. Jabber 100 VRR was a long idea back here. If you're still in it, guys, at this point, which I am not, I'd probably have a swing stop right here. That's the higher low. I like to use higher lows for swing stops. Next, Jabber 101 SFL, same deal. Was a long idea back here in August. Look at this move. If you're still long this sucker, congrats. I am not. But these dotted lines are your higher lows. So at this point, I'd probably have a stop here. Okay, if I still wanted to be in the thing. Next. Jabber 102, HCC, another one that's really done well out of this base. Just honestly, you don't really have any good higher lows here. So your 9 EMA is your guide here at this point. Hell of a move. Next. Jabber 103, Etsy was a big coil. Again, if you're still in it, I'd say your higher low right here would be a stop. This is your next target, 225. Next. Jabber 104, POWI, really great long idea out of this trend line break. Again, if you're still in it, maybe a stop right here at that higher low. Next, Jabber 105, ASML, again, hell of a move. Trail your stops up. I'm not in these anymore, guys, myself. If you are, congrats. Next, Jabber 106 team, just a textbook coil, beautiful pattern, just riding its 9 EMA up. Next. Jabber 107, CNK. This was a low risk long out of the divergent low here. I am going to monitor this one though for a possible re-entry on this pullback. See volume is light so far. Moving average ribbon still bullishly stacked. I will watch to see if it can form a higher low and I get a long opportunity again. Next. Jabber 108, CTAS. Here's an example of one, guys, that depending on how you trade it, you may still be in it or not. So this triggered here. It went down. Now, if you had a super tight stop, you could have been stopped out here. If you gave it a little room, say this trend line, you would have stayed in it, and you'd have a winning trade here. I'd be wanting to take profits on it just because of the way the market looks like at the moment. Next. Jabber 109, DCT was also a great long out of this base. And finally, Jabber 110, Airbnb. Here's another good example. This is a long idea. It broke the trend line. If you miss this, you had your second opportunity on the retest of the trend line here. And it has moved nicely higher. All right, let's now look at some new setups, guys. So when I looked at all the scanners this week, by far the majority of the stocks I saw were short ideas. I honestly added too many here, but I just went ahead and put what I found and don't try to play them all, but here's some to monitor. So 4 looks weak, doesn't it? If it loses this trend line, this could be a good short. Next, Jabber 112, EVRI, another potential short. If it loses this trend line confidently, maybe down to the 200-day moving average could be a target. Next, Jabber 113, Boeing also looks quite weak on this shelf support. Next, Jabber 114, Beam. This could be a long with a stop below the trend line or a short, either one. Next, Jabber 115, Beyond Meat. This could be a short on this break. Remember, this also is support. The fact that the market is oversold, be careful with these shorts, guys. It would be better to look at these, honestly, on a market bounce. Okay. Next, Jabber 116, Caterpillar, also looks potentially weak here. Moving average ribbons are all kind of bunched up. So this looks vulnerable for a sell-off, especially if the market does. Next, Sharper 117 Costco. Now this has been a super uptrend. We had it as the long idea back here in this coil. Look how well that's worked. But if you want an aggressive short, notice you got a wedge here with MACD divergence. So one to monitor. Next, Sharper 118 Cron. Also a potential short. It could also be a double bottom, so be careful of that. Next, Sharper 119 FSR, another potential short if it loses this area. Next, Sharper 120 USB, another potential short if it loses this area. 200-day moving average would be a first target area. Next, Sharper 121 Tilray, another potential short, or it could be a long if it finds support here and curls up and breaks this downtrend line. But at the moment, it's weak. Next, Sharper 112 OSTK, another potential short if it loses that trend line. Next, Sharper 123 TXN Texas Instruments, big coil pattern, holding up very well. It's in the semis, one to monitor, honestly, for either way. But if this holds up and the market sells off, this is one to monitor for a good long. Next, Sharper 124 Home Depot, still in this big coil. Next, Sharper 125 NVIDIA. Someone asked me about this. First off, it broke out of that coil back here in August. It has a potential flag here, but I think the market would need to hold up for this to work. But if the market recovers, like it's been doing, let's say it recovers this week, well, maybe this will break out too. Again, you don't buy it unless it triggers. Next, Sharper 126 Blink coil pattern. For now, it looks like a short. Next, Sharper 127 Snap, a coil pattern. This could go either way, up or down. It's been on the list for a while. Next, Sharper 128 Shopify, another coil. Next, Sharper 129 SGMS, another coil. Next, Sharper 130, the final chart, finally, another coil, HEES. By the way, the newsletter ended up being 1 hour long, guys. All right, guys, that'll do it. We'll see where futures open tonight. We'll see what the crazy market does this week. Enjoy the rest of your Sunday afternoon. Take care.